Hello and welcome to this week market dashboard, where we will take a look at what happened this week in the market and especially the new all-time highs in Bitcoin. So let's take a look. Well, nothing much happened this week, so we have equities and bonds slightly down. Not much happened again this week. We have new developments on tariffs, which weigh on the equity market and on the interest rates markets. We had the Fed being slightly hawkish in its minutes, directing investors thinking that maybe a cut in July would not be happening. It would be potentially postponed to September. Obviously, that weighted on the yields, and the yields slightly higher and bonds lower at the same time. And the next development was at the end of the week was the stronger than expected labor market, which will potentially add to inflation. But the biggest story, of course, this week was new all-time highs for Bitcoin at $180,000, more than $180,000. IBIT, of course, rose to new highs as well, and we will see this in a couple of seconds. Now, on the equity side, you can see that basically all equity indices are down this week, except for the Euro stocks, which was slightly up. Again, I don't think that it's really totally significant. It's mostly the result of the reallocation from the US to Europe, considering the current uncertainty in the investment environment, specifically around tariffs. And this is what I believe lifted the euro dollar, because there's also no reason for the euros to be much stronger than the dollar. The Europe is in as concerning situation in terms of debt, government debt, but they do not have the strengths of the US in terms of economic activity. Now we see the S&P 500, the SPY actually, the ETFs, the corresponding ETF, and the VIX. You see that there's no real reason to be concerned. We are near the all-time highs. The VIX is very low. Everything looks good, except that we can point out that we are back in the situation that we were before. If you see, the Max 7 is up, which lifted the S&P 500 for the week, when the S&P 493 is down for the week. This is obviously companies that will be much more impacted by tariffs. Now, I just wanted to show you this. This is a little seasonality analysis. Usually, just to mention that usually the month of July is pretty good in terms of seasonality. We are in the middle of the sweet spot for July, before it usually gets a little bit more hectic. During the summer months, they are many people obviously are on vacation. The liquidity is lower, and this is usually when kind of a couple of shenanigans happen. If you remember last year, there was the fear of the carry trade unwinding around the end of July and beginning of August, before the Bank of Japan intervened to calm the markets. But usually around the end of August, the end of July, and the beginning of August, markets become a little bit more hectic and even less readable, even in September, October as well, until what we usually have in terms of rally around the end of the year. However, it's only a guide. It's nothing certain, obviously, and this is just a seasonality analysis. But since we are in a sweet spot at this time in terms of seasonality for the US equities market, I wanted to share that with you. So obviously the story of the week is Bitcoin hitting all-time highs at more than $118,000 for one Bitcoin. This was supported by very strong inflows for the ETFs, for instance, and you know that everyone investing in Bitcoin is looking at the relationship between Bitcoin price and the M2 money velocity. And there's a lag between the Bitcoin price and M2, and you see that M2 is still rising. And this is why many investors are actually expecting this relationship to hold and Bitcoin to go up at this point, and this will have to be monitored. Now about gold, I've seen many comments about gold going down. Well, I've seen actually the same comments about Bitcoin recently, about Bitcoin going down, and this is the reason why in my investment strategies I actually never go against the price, because you can never be right against the market. The market is always right, whatever you think it's, for Bitcoin, for instance, I had this debate yesterday with someone on LinkedIn and say whether you think that Bitcoin is a fraud, whether you think that Bitcoin is the next big thing. Actually, nobody cares. There's nothing you can do about that. The only reality that we have is the price of Bitcoin. So if you follow the price as long as it goes up, and then you stop following when it's going down, I mean this is not an issue anymore. And this is similar for gold here specifically. I was hearing a lot of people saying gold would be going down, specifically with the equity market hitting new all-time highs. This is not what prices are saying. I just draw the trend line. This is not something that I use personally, but I thought it was interesting because we hit this trend line specifically is pretty clearly defined, and nothing points to a drop in gold at this time, specifically considering that the condition for the rise of gold, which is government deficit, bonds and collapse, there's nothing much available to park money except for gold and potentially Bitcoin. So on a price basis, there's nothing to me that says gold would be collapsing. Maybe it will, honestly, I don't know. And on a fundamental basis, the conditions that gave rise to gold didn't change either. So at this time, there's no reason to change in terms of assessment of the gold situation at this time. So another quick look at cryptocurrencies, not only Bitcoin. So we've talked about Bitcoin already up more than 8% for the week, which is less compared to other cryptocurrencies such as Ethereum, Solana, Ripple, or whatever. But what's interesting, I believe, is to note that when the last time Bitcoin hit all-time highs, many of the other altcoins were reaching all-time highs as well. I believe it was 75% at 2023. It was about 40% at the end of 2024. The recent, the last time that Bitcoin hit all-time highs, this time 0% are hitting all-time highs at the same time of Bitcoin, which is, going back to the mantra, there's Bitcoin and the rest. And this is where we are now, despite the very significant gain of altcoin or other coins this week. So just a quick update about the situation since the beginning of the year for major assets. We see that now both equity, US equity indices, so S&P and Nasdaq and Dow Jones Industrial Average, and even small caps are in the black right now. Even bonds did nothing for the year, except the midterm 10 years, around 10 years bond. But obviously the big story of this first half of the year is the rise of gold and the rise of Bitcoin, which are at this time about the same performance year to date. So which is I believe very interesting, because this is a shift towards from risk asset to other parking assets, specifically in the context where bonds are not a safe, risk-off safe asset, where people are directing the investment to when they don't want to be in stock. They rather now be in gold, or maybe potentially even in Bitcoin. And I thought that was interesting to note at this time. So thank you again for being here, and I hope you've been reading the Croissant Files newsletter. I invite you to go there. The link is below if you need to access it, and see you next week. Bye bye.